Good morning everybody, it's Christian from Serene Education with the 4 majors analysis update for the 17th of February 2012. Just going to be finishing off this week looking at the 4 majors on our 4-screen strategy template. And the first one I'm going to look at is the weekly, just to give you an idea of what's been happening this week. Not a hell of a lot. We haven't seen price trading anywhere higher than the 2 prior resistance levels here, or support in this case, here roughly around the 1320. What's that level? 2300 mark. Okay, and that's going to reflect quite clearly on the daily hesitation, noticeably higher highs. However, since then, not really maintaining that momentum, and price has been falling lower. Okay, so now what I've done is I've drawn a fib retracement level from our low here to our high, and we've had the pullback since, and you can see that the 23.6 and 38.2 have been 2 particular fib retracement areas where price has really been playing or trading between. Noticeably yesterday we saw price action closing lower, 38.2, and we saw price moving all the way down to the 50%. However, in the US session, price moving all the way back up again and closing above the 38.2. Now a nice little hammer on the 50. Notice the last attempt we had at the 50%, period moving average in the past, we have found support. So are we going to see price moving higher on that? Well, if that's the case, then we need to see price closing above 13.15. Okay, quite clearly the 13.1500 mark is the 23.6 fib retracement area, and if this is a genuine hammer at support here at 38.2, which happened to be a price support, then we want to see a genuine bounce. A hammer, got to see a bounce, and that bounce has got to close higher than 13.15 to start with today, or by the time we hit the US session, so that momentum can move higher during the latter part of today. If it doesn't happen, then we could just see consolidation with potentially 38.2 being our first target. Again, notice our CTC, we have 3 parts of this strategy in play for us. We have our red CTC on the other side, but no candle. Okay, so we need to see red arrow candle, then the CTC on the other side. In this case, you can quite clearly see we are still bearish overall, because we are still very much in a bearish trend long term. However, this is just a consolidation to the upside, and now we are trading sideways, consolidative sideways. Okay, for this to remain bullish, got to see price closing above 13,1500. Okay, ideally on an hourly, confirming nice bullish movement to the upside. So we need to see a breakout, some sort of little pullback, and then a continuation up to these areas that we saw here prior at 13,3200. Okay, if we don't see that close higher and price just testing this area at 13.15 and falling over, then we should be looking back at 38.2 and then down to 50, etc. during the course of the intraday session. So there we go. I plotted those lines, and you can quite clearly see we are seeing a pullback. That 23.6 mark is here roughly around the 13,1600 or 13,1500 mark. Got to see price trading above that, but then we have our 50 period moving average, and you can see the last time we were above that, what happened. So we've got to see a genuine breakout, a pullback. We saw a pullback, but that pullback failed to materialize and support above here, especially with something like that, for example, and price moved straight below that and cancelled all that upside decision, then confirming definitely that we should be looking for further shorting opportunities, and that's what arose. Here again, same thing happening. Failure at 13.16, prices moving lower in the early parts of the Asian session, pretty much consolidative, spinning tops. We do need to see price failing at this level, a close below 23.6. I've taken a pullback of this one over here, so we get a close below 23.6, then 38.2, and then 50 back down to the 38.2 here on our higher time frame would be our intraday target for the setup. Okay, so we've got to see price pausing and then moving higher, and if we fail to see that, then we ideally have to look for lower lows. CTC is still in our favor. Institution moving just below us here where we saw the bounce yesterday, which coincided with the 50% mark. So very important. If this is to remain long-term long, we need to see this area here at the 23.6 being breached and support being found, and then we look for a candle to give us that signal we should be looking for longs. Until then, we should be looking for shorting opportunities, because we are seeing consolidated. We are on a negative trend. Yes, we've had a pullback, but we're still on a negative trend overall. On our hourly chart, you can quite clearly see that the RSI as well has been spending a lot of time below the 50% line, Now for the first time we're trading above it. Okay. However, notice where the institution moving average is. And if this is to remain bullish, then we need to see a break of that price swing. So break of here, yes, it's giving anything, but we need to see, as I mentioned, we need to see a nice big bullish engulfing candle to the upside, confirming the price is happy above these areas, breaking this price swing here, and then we should be looking for further upside. Until then, we should still be looking for bearish consolidativeness to occur, with potentially an outlay for further downside to occur. I've just plotted a high to the low here, the pullback low. You can quite clearly see that the 50% line, which is the 1500, which happens to be our 23.6 on our daily, is a very strong support and resistance level. So you can see quite clearly here, for this to be really a genuine pullback against the major trend, we do need to see that area being breached. Until it's such time as it is being breached, then we should be looking for bearish consolidative lower swings. We're forming lower swings. We could potentially see a lower swing here, a break below 38.2 here at 1310. We definitely confirm we should be looking at 23.6, and then the zero line to the downside. CTC is still bearish across the top here. Yes, we are going slightly bullish here. However, we still haven't closed above that very important resistance level here. That will only happen once we see price trading above, and then we might see the RSI kicking off from that. However, we are still got one thing in our favor, that it's not looking for highs. It's the fact that we're still trading below this 315, which happens to be prior resistance on a number of time frames higher than the 1 hour. Onto the sterling against US dollar. Let's have a look at the weekly. Hesitation here again for this pair. Noticeably, you can see the two weeks where the bodies didn't move any higher. Subsequently, the wicks did. However, the bodies closed lower. Shooting star here formation, a definite further selling contracts and purchasing ones as we've headed higher, and that's reflecting on the chart. If you look at the daily scenario, that happening around here on the between the 6th and the 13th, and that just coincides with the institution moving average. We saw price fading at the institution moving average before, and we're seeing it again here. Okay, so price just went sideways for a number of days, a full week or so, finding support, pulling back, support, not once closing lower than that support area. We wanted, if this was a bearish engulfing or tweezer top at resistance, we want to see a genuine break lower to confirm that bearishness was, or selling was the more likely to occur. We had a doji, more selling contracts, and sure enough, we saw the break lower. That would have been your candle to tell you that price is looking for further downside movement. Then, if you just plotted your RSI retracements on here, so you had your low and you had a high because price has been pulling back, you'll notice that the 23.6 is that support area. A breach of that 23.6, price closing lower, should indicate that we should be looking at 38.2 as the next target. That occurred. A break of 38.2 and closed lower, which didn't materialize, would have told us to look for at least to 15,600 as our next target here at the 50 and 50 period moving out and 50% retracement area. What we had was an indecision followed by a bullish engulfing. So this candle here has cancelled out all these 3 negative days here. Okay, so we should be looking for price now to stay above here, hopefully 23.6, anything above the 15,700 mark intraday. If we can stay above those highs, then we could see a potential pullback and then a continuation higher. Notice where price is trading now. That bullishness took us back to price support, intraday, not intraday, but the price support area here. This could be the new resistance. So we could see a pullback roughly. If not, then price will continue back up to this institution moving average and reattempt the area like we saw previously. Pullback, reattempt, pullback, reattempt, and a failed pullback, reattempt again, and then price fell over. CTC overall on the daily is still looking bullish. So as long as we're still trading about 1577, we could ideally look for further highs. This bullish engulfing over here really telling us that there might be some more buying sentiment creeping into this. To a 4 hour time frame, you can quite clearly see at the 23.6 mark. I've taken that low to our high and drawn our fib retracements, and you can see the 38.2 here definitely acting as support yesterday. We had a hammer followed by an upside candle followed by a bearish engulfing, and then we saw a lot of indecision going this, failing to break below that 38.2, closing bearish. Even though we're on a bearish consolidative, lower swings depicting downside movement, we failed to see price closing lower to confirm that price was still looking favorable to the downside. Saw a lot of indecision. CTC was negative. We didn't get a break. However, our RSI on our hourly chart was giving us a whole new, a different story. As price was bouncing over here at 1366, you'll notice that RSI was starting to strengthen. Okay, as we tried reattempted these lows, RSI was starting to strengthen, so telling us that there's more buying sentiment contracts being purchased, and sure enough, we wanted to see a bullish engulfing to confirm that. We had this exactly here, and then we should be looking for the upside movement. So break above the price swing, should be looking at the previous swing as our next target. That's exactly what's happened now, and as price has moved higher, trading between the 50 and the 61.8, it's trading above the institution moving average. CTC is blue, RSI is blue. Above 50, we are seeing some consolidation, but if we can stay above the 50 here at the 15, as I mentioned, the 1578 or 1577 mark, it'll be trading above the institution moving average, which is good. And as long as it maintains that above the institution moving average, then we should be looking for higher highs for the remainder of today. So what's going to be what we need to see from price today is through the European session, price maintaining its highs here above 1577, and then a push on during the US session to the upside, where a break above 1582 would see prior highs way up here, ideally back up to 1586, and then all the way back up to 1593, which we were there quite recently on the 8th. Into the US dollar Swiss franc. Here again, let's have a look at this one. Yeah, this is the third week, going into our third week where we've seen price stalling at 0.9100. Just want to put that in so you guys can see it. Trendline properties. Just going to extend that. There we go. Quite clearly see support, support, support. Third week now where we've seen price failing to break below that. Institution, the overall trend for this is still bearish. Yes, we've seen a pullback, but it's still bearish consolidated because we're still below the institution moving average. So if you're trading bigger time frames, you want to see price trading well above that in order to be trading weeklies to the upside. Fail to see that, which should look for further consolidativeness. Oops, apologies for this. Looking at the daily, you can see quite clearly that support here at 9100, as I mentioned, pretty much going sideways. Price has really been just moving sideways, bearish consolidative, still under all the moving averages, and the CTC confirmed that. However, price has moved back and retested prior resistance levels at the top here. Notice for yesterday's candle really moving higher back to the top, however closing lower. So this is definitely a shooting star at resistance. We should look for price to fall back to the lows again. So ideally we should be looking back at 9100 as a potential target intraday if that's the case. I've drawn a fib retracement from the high to the low here, the consolidative low. You'll notice that 23.6 is an area where prices failed to really materialize. Yes, it broke above yesterday, and we should have looked at 38.2 as our next target. That was the case. However, price failed to materialize and close above that during the course of yesterday to confirm that we should be looking at 50%, because the 50 period moving average came into play, which we saw resistance before, and price moved all the way back again. It didn't close higher than 22.6, confirming that price is still looking bullish. It closed lower. So now we see during the European Open, price failing to break above 22.6. Then that candle should stick out as a shooting star formation after an upside move, and now we should see price falling lower to the downside intraday. So look for potential resistance to be found now at this 23.6 area, which happens to be your 92.06. Okay, fail to find 92.6. We should ideally, let me just plot this down the bottom here so you can see quite clearly. There we go. That's a 23.6 on the 4-hour chart. Failure here to pull back and close higher should see price reverting to the downside. CTC is blue, okay, but we're still below the institution moving average, guys. You can see we rallied into that institution moving average yesterday and price fell off. So we've got to be trading above the 92.50. Failure to close higher than 92.50 on an hourly or 4-hour chart would clearly state that we're not looking for further highs. We should be looking for further bearish sentiment to creep in, because now we've got our first arrow, red arrow. So now we're waiting for a candle to close. So if it doesn't materialize above 22.6 on the 4-hour, then we should be looking for shorting opportunities, and then the areas down here at 90.10 should be our ultimate goal for this pair. Last pair of the day is US dollar Japanese yen, and look at the weekly. This pair has really been hotting up over the past weeks. It's the second consecutive week we've had nothing but buying really rallying above 7800, which happened to be prior resistance, long-term resistance, smack bang into the 50 period moving average, which happened to be clear resistance in the past as well in this pair. CTC still remains very, very negative on this outlook on the weekly. If you look at the daily, for example, that buying sentiment really creeping in, and ultimately price really moving to the upstairs, to the upside. 100% would be our initial target on this pair, as we've seen price pulling back and then moving higher. Ultimately, the goal here at 79,280, I think, would be ultimate target. I would take profit here at this area here before we see consolidation taking place, before we could see potential reconfirmation of that upside trend. So as it stands now, apologies, 79,2800 should be our ultimate goal on our intraday. There we go. If I just put that in, 79,2800 roughly up here should be our target, and things are looking very, very good for further for the upside for this pair. If we can remain above these highs, then long term it's just boding well for this pair. If you look at the hourly, however, notice as we've been heading higher, the RSI is definitely starting to slow down. Okay, quite clearly see here, RSI is definitely slowing down, and that's because we're heading up into this potential area where we could see price consolidating now at 100%, because anyone who got into this trade here on the hourly, the daily, back here on those favorable non-farm payroll figures, where price really moved to the upside, would have seen first extension, then the pause, and then a second extension. Okay, so what you want to see after the initial one is see a pause and then break up, and you want to see that second extension being 100% of the initial move, and that's taking us roughly around here at the 2900 mark. Okay, so that's where your target should be. Break above that, we've got to see a clear break above that before we see any further extensions higher. So it alleviates us being triggered into trades prematurely. So just be aware of that. On this pair, we're heading up towards that area, and the closer we get to that area, the more likely is we're going to see consolidation taking place. Heads up, see the consolidation taking place here. The last 4 hours being indecisive. Bearish Arami potentially taking place. We could see consolidation with potentially a pullback during the course of today taking place. Okay, you want to see higher highs on RSI, and what you're seeing at the moment now, this previous one, which is this little dip at the top here, if you look at where price is trading at the moment now, you can quite clearly see we have broken above that previous high. However, RSI is still the same, so we should see bearish consolidativeness creeping in, and if that's the case, we should moving your stops up from any trades if you are long on the US dollar Japanese yen, just in case that occurs. So bring your stop up to your prior swing, in this case down here at 78.50 if you wanted to, and just let price continue its way. That's it, guys. I hope you had a fantastic trading week. I know it's been very volatile. I've spoken to a number of you students out there. You've got to change your strategies, guys, to factor in all this volatility and all this volatile as we're seeing out there. Otherwise, don't trade. You have two things. You can either change your strategy to incorporate the volatility, or you have to stand aside and wait for a clear direction. Have a fantastic trading day, weekend, or trading day, and have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serene.